I am here with another final year question and solution of the same. So I have already solved this question. I will show you the details solution. But prior that, let me read the travelance first. So the travelance is a share capital. I have classified this. I'm going to explain once again. Share capital, it is the balance sheet item. Purchases, profit and loss, sales, profit and loss, opening stock will show in the profit and loss. If you can recall the format of the statement of profit and loss, you might have observed that there is one of the important component under your expenses, that is changes in inventories of finished goods, work in progress and stock in trade. There we'll see the difference between opening and closing. Salaries is your profit and loss. Machinery balance sheet, depreciation, accumulated. These are two important things. Both are not same. Okay, so one is your depreciation, another one is your accumulated depreciation. See, depreciation is showing on the debit side, accumulated depreciation I am showing on the credit side. Okay, so we'll see the treatment. This one is the balance sheet. Balance sheet will adjust, will show in the balance sheet, and this one will show in the simple depreciation, will show in profit and loss account. Then you have debtors, creditors, cash and bank balances, balance sheet, provision for taxation, balance sheet. Now there are four simple adjustments. One is your closing stock, 1,10,000. Income tax, yes, income tax is interesting that we have that you have seen now. Then outstanding salary, easy. Transfer to general reserve. In our last question also we have transferred some amount of profit to general reserve also. So here we'll see. But here compared to the last question, there is no dividend. When we will prepare the appropriation, when we will see the appropriation of profit, will only transfer 25,000. If there is a dividend, you will you can refer how to treat the dividend in our final account or profit and loss appropriation. You can refer that particular video. Okay, so this is the travelance. Let me start with this statement of profit and loss. So simultaneously I have prepared the notes, so you can see the note number. Number one is a revenue from operation. Revenue, only one item, that is sales, is there. So sales 3 lakh, the amount is 3 lakh here. Fine. Other income, there is no other income. Total income is coming 3 lakh. Now expenses, cost of material consumed. So there is no information regarding material consumed, but there is purchase of stock in trade. So purchase of stock in trade, 1,90,000. There is no adjustment with respect to the purchases. So the full amount 1,90,000 I am showing as purchase of stock in trade. Changes in inventories of finished goods, work in progress and stock in trade. So this is note number 3. Here note number 3, changes in inventories of finished goods, work in progress and stock in trade. So I am showing the difference between opening and closing stock. So my opening stock is 80,000, my closing stock is 1,10,000. So it is coming negative, as my opening stock is less compared to my closing stock, so it is coming negative. So I am showing negative 30,000 here. Employee benefit expenses, here only salary is there, so outstanding salary is there. Salary 40,000, outstanding salary 25,000, altogether it is coming 65,000. So my employee benefit expenses is 65,000. Now finance cost, there is no information regarding taking loan from third party or issue of debentures. So as there is no such information, so I'm considering that the finance cost is nil. So it is nil. Depreciation and amortization, only depreciation amount is there. See, only depreciation, and depreciation is showing in the travelance. When it is showing the travelance, will show here. When it is showing in the adjustment, will share. In both cases will show here. Okay, but remember, not accumulated depreciation. So my depreciation amount is 10,000. So all my expenses coming 2,35,000. Now what is the profit before exceptional and extraordinary item? Is the difference between this total income and total expenses. It is coming 65,000. Okay, now there is no extra exceptional items. Okay, so the 65,000 is remaining as the profit before extraordinary items. there is no extraordinary item, so it is becoming profit before tax. 65,000 is the profit before tax. Now the next component as per schedule 3 of the Companies Act is your tax expenses, that is current year tax. So in this year, see adjustment to income tax for the year 10,000, so I am deducting 10,000 as the income tax, so the profit after tax is coming 55,000. okay, so this is the statement of profit and loss. Okay, now as there are some information, there is only one information is there, that transfer to general reserve 25,000 is there, as it is relating to the appropriation, so I am showing the profit and loss appropriation. Okay, so in our last question we have seen that if there is any general reserve transfer, if there is any interim dividend, if there is any final dividend, we have seen the treatment of this. So in this question only one information is given, and that is transfer to general reserve. So profit after tax as it is showing here is 55,000, transfer to general reserve 25,000. okay, so it is given already. Now if any information that this much percentage of the profit, so I will calculate the percentage of the profit. So the absolute figure is given, so I am showing absolute figure. okay, so 55 minus 55,000 minus 25,000, that is the balance of 30,000 I am transferring to balance sheet. okay, so this is all about profit and loss appropriation, up to profit and loss appropriation. okay, now we'll see the balance sheet. I have already prepared the balance sheet, so I'll show you how I have prepared the balance sheet. So you need to follow the same structure as given in schedule 3 of the Companies Act. I have prepared according to schedule 3 of the Companies Act. You need to follow the same format. okay, now the first one is your equity and liabilities, the second one is your assets. Under equity and liabilities 4 different heads are there. The first one is your shareholders fund. Under shareholders fund the number A is share capital. okay, share capital is 6, so 6 is share capital, only 2,50,000, there is no adjustment, so I am showing 2,50,000 as your share capital. Next, reserve and surplus 7. Reserve and surplus, the current year transfer to general reserve 25,000 we have transferred this year, and that is given in this adjustment. okay, number 1. Number 2 is your profit transfer to the statement from the statement of profit and loss, that is the profit after transferring to general reserve is there, and that amount you need to show under the reserve and surplus. okay, so the reserve and surplus, the amount is your profit that we have transferred from the appropriation is 30,000 and total is 55,000, so I have written total of 55,000. so this is your shareholders fund. Share application money, pending allotment, there is no information. Non-current liabilities, under non-current liabilities there is no long-term borrowings, there is no deferred tax. Other long-term liabilities, long-term provision, there is no such information. Short-term borrowings nil. Trade payables, only one information, that is creditor is given, so 70,000 creditors I am showing here. okay, 70,000 creditors. Other current liabilities, only outstanding salary is there, 25,000 will show here as 25,000. Short-term provision is there, the provision for taxation already given in this in the travelers 10,000 and the current year tax that will give is 10,000, so altogether 20,000 is the short-term provision, so I have written 20,000, so altogether is coming 4,20,000. Now while reading the trial balance, I have told that accumulated depreciation is your liability, right, and it is shown in the liability, but although it is written on the credit side of the trial balance. okay, so but it is not as such credit. You have not borrowed money from anyone, right, so this is not your liability, we will show as your contra assets. So contra assets to offset the value of a fixed assets. okay, will adjust from the tangible assets, will adjust from the fixed assets. Now coming to the asset side, so non-current assets, number one is a fixed assets and tangible assets. Tangible asset 1,80,000, tangible asset 2 lakh, and accumulated depreciation. See, so now you may ask that, okay, my accumulated depreciation is 20,000. So whether this accumulated depreciation with respect to which asset, right? So see the travelers once again. Only one asset is there, and that asset, and from that asset we are subtracting the accumulated depreciation to find out the net book value of the asset, and the net book value of the asset is 1,80,000. So we are showing 1,80,000 as your intangible assets. Okay, sorry, tangible assets. Intangible assets nil. There is no investment, there is no loans and advances from the company side, there is no other non-current assets. Now coming to current investment, there is no investment, whether long term or short term, no investment. Inventories. Now note 12, inventories, the closing stock here. Okay, closing stock 1,10,000. Trade receivables, so here trade receivables, only debtor amount is there 60,000, so 60,000 is the trade debt receivables. Cash and cash equivalent 70,000. Cash and cash equivalent as given in the trial balance 70,000. I'm showing here 70,000, and altogether it is coming 4,20,000. Okay, so both sides of my balance sheet matched, right? So with 4,20,000 on each side. So this is the way you need to prepare the financial statement when there is a depreciation and accumulated depreciation is there in the trial balance. Okay, so I hope you understood how to prepare the financial statement if this kind of adjustments are there. Okay, so thank you everyone.